Hello and welcome to take 4 or 5, something like that. Coming to y'all from my house. Wanted to send out a video message. So I'm new to this medium, so bear with me and be patient and be kind as I try to make a video. What I wanted to do is come to you guys instead of a long-winded email. I wanted to kind of give you a video update. And I know you have time to read an email, everybody's sitting at home, but I thought it'd, easier to get through if we watch a video. So what I want to do is spend a little bit of time talking, kind of review where we are, kind of what we're going, some market history, and then we'll, kind of wrap it up. So I was hoping to have this just a few-minute video on take 3 or 4, something like that. It looks like it's turning out to be about a 15-minute video. What I will tell you is I'm coming from my house out in the country, so our farm, so you may hear a rooster in the background, there may be a dog in the background, or you may hear one of my 5 kids, even though they're sitting here watching, they're supposed to be quiet. You may hear them in the background as well. So that being said, let's move forward. I've pulled this data off of several different sources. And, even if we weren't on quarantine, with all the pollen in the air and my voice hoarse and me coughing, nobody'd want me around anyway because it sounds like I may be sick, and I'm not, I just have allergies. So I've pulled this data from several sources off the internet, pulled some of it from Harvard Medical School, I've pulled some of it off of the Dow Jones, I've pulled some of it off of different places, and then I've also used, and I'll cover that here in just a little while, I get a one-page sheet that's called Beyond the Whiteboard, or Beyond the Numbers, that will review some data from that here in just a minute, but I wanted to give everybody credit. So kind of give you an executive summary if you don't want to listen to or don't have time to listen to all 15 minutes right now. We're going to be okay. I think the market's going to be just fine. We're going to get through this. Now, what I want to talk about right now is that what the market doesn't like is it doesn't like uncertainty. And several of us have talked about this, pardon me, in the last year. I've talked with many of you guys about this. And we knew it was going to be a volatile year just because there's an election year. And the market just doesn't like uncertainty of knowing who's going to be elected. So then we throw in the other 2 items that are throwing a lot of uncertainty into this is the oil war that's going on, between Saudi Arabia and Russia, and them pushing prices down. And the price, from my understanding, is that Saudi Arabia can be drilling oil at about $9 a barrel. And so right now, from my understanding, is that it takes the United States around $30 to $35 to break even, and Saudi Arabia's at $9. So right now it prices around $20. They still have some more pressure they can push down on the oil price. But we don't know how long that's going to last or how far down that's going to go, and so that's creating some uncertainty. And then the last thing is the COVID-19. That's providing a lot of uncertainty to the markets. We don't know how long that's going to last, how bad it's going to be, how many people are going to be sick. We're going to cover some good data here in just a minute that looks pretty promising, but the uncertainty of not knowing is what's creating the volatility. So those 3 things right now are creating the uncertainty that the oil war could end pretty quickly. We could come up with a good treatment, or COVID-19 could get past us pretty quickly. By the way, I am drinking out of my kids' happy, happy, happy cup. It's a good day to be happy. So that cup my kids got me. So those are the 3 things that are uncertainty. Now let's talk a little bit about the government and what they're kind of, in my opinion, trying to juggle. And this isn't to try to judge or try to argue about how well or how bad or how poorly they're doing. It's to talk about the 3 things that I think they're trying to juggle right now. And one is they're trying to keep the economy to continue. And even though a lot of us are at home, in fact, I heard a report that a doctor said a really good job. Hey, you might not feel like you're saving the world by sitting at home, but you are by not spreading the virus. So they said you might not feel like you're saving the world by binging on Netflix or hanging out with the family, but by not spreading it, we truly are. And back to the things that the government's trying to control, the 3 things. One is that they're trying to control the economy, and they're trying to keep the economy expanding. And the good news is that we are seeing our supply chain is still operating. You go to the grocery store, it's still full. You go to Walmart, it still has stuff on the shelves. So those things are still happening. So that's good news. Then the next thing they're trying to not do is they're trying to not overwhelm the hospitals. right now here in the United States, it looks like we have a mortality rate of about 1%, which is a whole lot better than Italy or some of these other places. So they're trying to not have us overwhelm the medical system so that the doctors can stay on top of this. And our doctors, in my opinion, are doing a great job. So we need to thank our doctors and our nurses. And then the last thing I think they're trying to not do is trying to not panic the people. And so they're not trying to have everybody kind of panic and run out and try to hoard the stuff that we have in stock and that we have continue coming in. You know, United States has done great on just-in-time delivery, but that also means that we only have about 2 days worth of stuff at most grocery stores. So as long as the supply chain's running, as long as we're keep it coming in, we're going to be okay there. So that being said, let's kind of review market history. And let's talk about the market history. And the first thing that came to my mind when all this started happening was the Spanish flu. And that happened, in 1917, 1918. Now, what we have to realize is that was coming out of Great World War I. So we were still in World War I when that happened. And, we were ending World War I as that was coming out. But what we have to realize, and we don't have actual numbers, we don't know true numbers, but the estimates are somewhere between 50 million to 100 million people died. Let's put that in perspective for a minute, though. The crazy thing is that it wasn't until the late 1870s, and that was when it was just becoming new to wash our hands. So you got to realize that the medical community was just doing research at about that time to wash hands. So the doctors still weren't washing hands. It was still kind of a novel item. So most people did not wash their hands. And so, early 1900s, we didn't see a whole bunch of people washing their hands. The other thing that's interesting is that penicillin wasn't discovered till 1928, about a decade later. So during the Spanish flu, we didn't have penicillin, people didn't wash their hands. And so there's been a lot of medical advances that we have seen since that time. And so I don't know that we'll see a Spanish flu type pandemic at this point. But that being said, the market was down 33.4%, and it only took us about 452 days to recover from that, a little over a year. And then I look at Black Monday in 87. The market was down 28.5%. It only took us 398 days to recover. Then we had SARS in 2003. And that was that had a pretty high mortality rate. The market dropped about 14.1% from SARS, but it only took us 40 days to recover. Once we hit the bottom, we were back recovered in 40 days. So that's the most recent pandemic that is similar to this COVID-19 that we're seeing. Then we had the Great Recession that happened in 2008. The market corrected and we hit the bottom in 2009. But the market lost 56.8%, almost 60%. But from the bottom, which was March of 19, it only took us 1,022 days, which equates to 2.8 years for us to start making new market highs. So those are some recent history. And so those people that are saying, hey, are we going to recover? How's this going to recover? What are we going to do? We actually have seen recoveries on some recent major events that have recovered in not too distant past. So some good news that what we're seeing also coming out of this event is that coming into this corona, what we were seeing is that annual incomes, and this is an annualized number, but annual incomes were up over 7.3%. In other words, we were seeing people get pay raises. So incomes had increased by 7.3%. While inflation had stayed in check. So we're seeing some good income numbers at the same time, not having inflation really take off. During March of 2020, some interesting data here, some real interesting statistic. We have seen the best week in market history, or not in market history, but since 2009, coming out of the 2008-2009 correction. But we've also seen the worst month since 1938. We've had the worst quarter since 1930s. Again, the Great Depression. We've seen the most volatility since the Great Depression. Now, kind of coming to some good news to look at is that over the last couple of weeks, And again, what these are now saying is it's given us what they call some indicators that possibly we've hit a bottom. Nobody knows. We won't know till we're way beyond this. But we're seeing some possible indicators that look promising. And again, I think we may have some more ahead of us, some more market volatility, just for the fact that I think that, when the news starts hitting about how many people are dying, even though we have such great medical care and it's only a 1% mortality rate, that it's going to spook the market. And again, it's not the news that's spooking the market, it's the uncertainty of how many are going to die. But some good numbers to look at here. One is that in the last few weeks, we've seen, and these are what are called buying indicators or leading indicators that possibly we've hit a bottom, is that last week, 80% of the New York Stock Exchange stocks increased in price. And with that 80% increase, we also saw 80% of the volume going in there. That's only happened 2 other times in the last 80 years, so a lot of 80s here. And what we've seen is that happened in the mid-1980s when we saw the bull run, and then we also saw that happen in 2009 bull run. So, some possible good buying opportunity. We've also seen about 57% of the S&P 500 signal buying signals. In other words, we're seeing over half are showing, hey, it's time to start buying. So some other good news from Harvard Medical School is that China is now shutting down some of their hospitals. So you got to realize that they got into this in late January, early February, and they're now in the process of shutting down hospitals. They're starting to reopen. We're about 2 months into it, and they're reopening, stores. I believe Apple's opened all their stores in China. China is starting to reopen and come back to life. So some other rumors from Harvard Medical School is that there's a vaccination that looks promising. The other good news is that 99% of the people, at least here in the United States, recover. Right now, our mortality rate's only about 1%, and 99% of people are recovering. The other good news is it's not impacting a whole lot of children here in the United States. They're able to treat them. The other good news is that our supply side is still running. So we have a lot of good news out there. So don't just sit at home and dwell on the negative. We got good news. So now I'm going to come off of this little chart that I get that's called By the Numbers. So give them credit for their research. This year started off with a bang. S&P 500 had nearly 11-year bull run, was up 202,756 trading days. Ran from March of 2009 through February of 2020, gaining 529%. So remember, we were down 56%, but then we ran up 529%. That's an average annual return of 18.3%. Pretty amazing. Then when we take a look at some of the indicators that show when we've hit a bottom, we're looking at the S&P 500 in this case. The S&P's fallen 34% as of Monday, the 23rd, March 23rd of this year, from its all-time high set on February 19th of 20. I don't know if you hear that rooster. But there's been 12 bear markets since the end of World War II. With the average return of the S&P 500 in the first year following the bear market, the S&P's been up 39.2%. And in the second year following the first year, it's been up 12.6% on average. So we've seen some good rallies on average after a down year. And some interesting information we have seen is that jobless claims for the week ending February the 1st, 2020 were at 201,000. That's the lowest level we've seen since November of 1969. Pretty amazing. And then here's some other amazing statistics. Just 7 weeks later, jobless claims were 3.28 million. Another record high on the high side. So interesting statistics. The other thing, the New York Stock Exchange has been founded. They've had people in the New York Stock Exchange trading since 1792. This is the first time that it's all been done electronically, that there's been nobody walking around the New York Stock Exchange because they're quarantined. So, interesting statistics. Now, let's talk about what the government's doing. Crazy numbers here, crazy statistics. So, the stimulus that they just passed is for $2.3 trillion. the Coronavirus Aid, Relief, and Economic Securities Act, also known as CARES. If we stop and think about that, represents 52% of the 4.4 trillion money that the government actually spent during its fiscal year 2019. So not only do they continue to spend their normal spending this year, they've also now positioned 52% of last year's budget or last year's spending for this stimulus package. Pretty amazing information. So the last thing I want to leave you with is the studies have shown that this coronavirus has a lot of fatty tissue on the outside of it, and so washing our hands does a good job destroying it. So washing with soap and water. So make sure you keep your hands clean. Try to, spend time with family, FaceTime with family if you're not close to them. Enjoy family time, and try to stay on the positive, stay on the upbeat, and realize that I think we're going to make it through this. It looks like China, it only took 2 months to get through this, so hopefully, we're in the same path, except for we have much better medical professionals, in my opinion, and much better medical resources. And hopefully some of the things that we'll take away from this is that we'll bring jobs back to America, and we'll come through this with our country stronger. It seems like neighbors are helping neighbors. Kind of reminds me of what happened after 9/11 or Harvey. So keep your head up and keep moving forward, and try to keep your hands clean and stay safe and healthy. Hopefully this went well. Hopefully you guys felt value out of this, and if so, then maybe I'll keep doing these on a regular basis to keep you updated. But the good news is, all this history shows that if we stay diversified in good mutual funds, then mutual funds have never gone to zero. We've recovered, and I think that we'll recover again this time. We just don't know how long. It could all happen very rapidly, or it might take a little while. It might take a few months. Either way, we're going to be okay with a diversified portfolio. Again, it reiterates the value of building a safe portfolio where we have safe money for the first several years, first 10 to 15 years of what we're going to need, and then everything that we don't need, we put in the market. We let it run its course. We let the market volatility that we know is going to happen, and we're going to be just fine. So y'all stay safe, and I appreciate all the referrals we've gotten during this time. We've gotten a lot of new accounts, a lot of new referrals, so I appreciate all of the referrals from everybody. I appreciate all of you sticking with us during these times. We've been busy opening new accounts, busy returning calls, busy returning emails. So those of you that are trying to get more money in the market, we're working on that. We're getting that in as we see down days in the market. And those of you that are in the market, we're going to be just fine. So if you have any questions, feel free to call our office. Our office is 281-392-2900. Again, it's 281-392-2900. And I hope you guys stay safe and stay healthy, and I'll talk to you soon.